Just moments ago, 11 Bitcoin ETFs were approved by the SEC, resulting in a large rally for Bitcoin towards the 48k level. In today's video, we're going to be discussing the implications this may have on cryptocurrency and Bitcoin going into the future, as well as the current price action and macro charts. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. What a historic day it is for cryptocurrency and Bitcoin. With 11 spot ETFs being approved by the SEC, it officially validifies cryptocurrency as a trusted and official financial asset in the eyes of the broader global markets. In today's video, we're going to be discussing the pros and the cons of this ETF approval, going over the macro charts, the short-term time frame price action, and of course the total cryptocurrency and total altcoin market caps. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is going to be the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining our VIP channel, we post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You can see over here, we post a whole bunch of trades, a whole bunch of profits are printed in here on the daily basis. You will also get access to our group chats, our general chat, our trading chart and education chat, our news, our help, our video, and our trade setup chat. If you're interested in getting access to all of that, go ahead and contact me in the pinned comment of the free channel for more information. Let's go ahead, guys, and dive on into the video. So starting on that market data, we are looking at a pretty big surge in 24-hour volume, sitting at over 200 billion here. This is up 26% in the last 24 hours. With that increase, we're seeing an increase of liquidations at around 15.53%. This brings us up to a total of 259 million in liquidations, with 117 million coming from longs and 142 million coming from shorts. If we look at the price action over the last 24 hours alone, we have seen a whole bunch of choppiness. We actually saw that candle come up and retest the 40k level. This was upon the announcement yesterday of the ETF approval, only to then be rejected, pushing us all the way back down to retest exactly. Look how perfect this was. Exactly the upper range of our prior channel. And that was upon the announcement that the ETF approval yesterday was a fake news event. We then saw the ETF approved today, which was the proper, real official announcement, which has now resulted in Bitcoin continuing back upwards. So what we saw was a short liquidation event, a long liquidation event, and now we are pushing upwards, liquidating a whole bunch of shorts. So a very choppy 24 hours, a lot going on in the cryptocurrency space, and today's going to be an awesome video because we're going to be discussing absolutely all of it. Moving really quickly over to that volatility index, we can see on the 30-day, not all that much change. We are starting to see the volatility index start to slowly move upwards, which is good to see. And on the 60-day period, again, we're starting to see the volatility index move upwards slowly, but not really all that much change still. Moving over to the DXY, the DXY is looking pretty neutral over here. We did break out of this multi-month downtrending diagonal resistance. However, we are sitting underneath this horizontal area of resistance. This is a very key level that we do need to flip to actually flip this trend officially. So breaking over this level over here, particularly the 50 EMA and this local low, will send the DXY back upwards to retest this 105 to 106k resistance. Sorry, $106 to $105 resistance. If we do see this move play out, this will be very bearish for traditional assets, including Bitcoin. However, if we do see a rejection and continuation lower, this will be very, very bullish for traditional assets and for Bitcoin. The direction of which DXY undergoes will be massively determined on the upcoming upcoming inflation data. If we go to our Telegram channel over here, we posted all the data yesterday. We said we do have a bunch of upcoming data. We have, which is going to be today, which is in about 12 hours. We have core inflation, and of course we have producer price index tomorrow. These will play a massive role in determining where the DXY will likely move, as it is, again, a huge leading indicator in regards to potential future interest rate decisions, and that is what sets the overall risk of the market and will result in the DXY moving. So if we do see inflation significantly jump upwards, this could push the DXY upwards. If we see inflation remain neutral or fall, we will see the DXY drop heavily. Without further ado, guys, we'll go ahead and quickly go over to financial markets and then jump over into Bitcoin. So S&P 500 looking very bullish over here, actually breaking back above this high, confirming a failed breakdown deviation, which is quite rare to see, but overall looking very, very bullish, particularly if we can close this weekly candle above the prior high we made around about the same price point. We would expect the S&P to continue toward the upside. Dow Jones looking very, very similar, guys, still an uptrend again. We will remain in uptrend while we remain above this area of support, the 37K level. If we drop back below 37K, that is when we run risk of seeing a correction again. However, for now, very, very bullish. With that being said, let's go ahead and jump into Bitcoin. Before we do, a quick word from Bitget BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump into Bitcoin. So as you know, the Bitcoin ETFs, the spot ETFs, have been officially approved. These come in at 11 spot ETFs. You can see the list over here. I'm not going to read it out. This is going to be the list of all the spot ETFs that have actually been approved, and I believe they actually start trading very soon. I think some of them even start trading tomorrow, which is going to be Thursday, which is crazy. Now, a lot of people have mixed opinions about ETFs. Is it a good thing? Is it a bad thing? And the answer lies in the middle. It depends on the perspective you look at the ETF from, will determine whether or not you believe the ETF is a good thing for cryptocurrency or a bad thing for cryptocurrency. So I've gone ahead and drawn up a very small pro and con list, and we'll discuss. So there are definitely a few pros for the ETF. Number one, it validates Bitcoin as a legitimate financial asset in the eyes of global investors and other funds, such as trust funds, superannuation funds. This could potentially bring money into Bitcoin. Now, we do have to be aware that the way the money will flow into Bitcoin from these funds are likely not directly over the counter or into the spot market. It will likely be done via these ETFs. And that brings us to the con, which is buying an ETF is not the same as owning Bitcoin. When you buy a Bitcoin ETF, you are essentially hedging on the market risk, meaning you assume the risk of the asset without actually owning the underlying asset. So this kind of takes out the two key value drivers of what Bitcoin is, which is self-custody and anonymity, right? Like you're anonymous, I can't even say the word. You know what I'm trying to say, right? You have privacy in owning Bitcoin. It is anonymous to you. You can own the Bitcoin. You can put it in a cold wallet. It is yours, and you own it exclusively away from a third-party centralized entity such as a bank or a government, right? So that gives Bitcoin a lot of value. So con number two is it pushes crypto trading off exchanges. into more centralized means. So again, this is really targeting the retail, the dumb money. A lot of people are going to think buying an ETF is the same as buying Bitcoin. So with that, a lot of the volume, a lot of the money is going to go into these ETFs and not go into Bitcoin itself, pushing a lot of the transactions into centralized means. This is very good for regulators, very good for the SEC and government, as they've basically admitted they are unable to regulate cryptocurrency. The next best thing to regulate cryptocurrency is to regulate the money flow into cryptocurrency as a whole. So they get the majority of money flowing into ETFs, they essentially regulate cryptocurrency via controlling the inflow of cash. The next one is, it does make cryptocurrency slightly easier to manipulate. I'm not going to get into the specifics on how that's done today. It will take way too long. Number four, it does dilute the money flow into the asset. Like we said, if we have $100 billion and prior to the ETF, $100 billion wants to come into cryptocurrency, there's only one way people can buy Bitcoin, which is through the spot market. Now they have an alternate option, which is the ETF. Some of the money might go into the ETF, some of it might go into Bitcoin. And as we know, ETF investments do not directly impact the spot price of Bitcoin, and thus this could actually suppress Bitcoin's growth over a period of time, particularly when we've already reached max level of public perception and engagement. And number the final one is tracking errors. So when you look at an ETF, they calculate gains based on NAV, okay? Or INAV, which is going to be intraday, but it's usually on the NAV. There are sometimes tracking errors, as this is calculated on day end, not during the day, intraday. So you can see on days there's a lot of volatility or a lot of price change, the ETF value or the value of the ETF might actually not directly reflect the value of a Bitcoin, and this could provide some tracking errors to overall profits for investors, depending on when you want to pull your funds out. Moving back over to the pros, guys, again, there's increased global attention for cryptocurrency, which is fantastic. It makes cryptocurrency, again, more, reputable in the eyes of investors. The next one is a big one for maybe new investors, which is you don't need to buy Bitcoin via an exchange, and you definitely don't need to self-manage an asset anymore. You buy the Bitcoin through the centralized means, so the ETF, just like you would in a stock market, and it is managed by the fund. You don't manage it, you don't own it, you don't have to move it to a wallet, you don't have to secure your keys, but the cost of this is you pay a fee and you forfeit self-custody. And the final one is diversification, which is a big one to bring in a lot of money into the cryptocurrency space, which is going to be through hedge funds, through superannuation funds, through trust funds, family funds, all these different funds that could bring and want to diversify their assets. So there are pros and cons, guys. How do I feel? I slightly leaned more towards the side of the cons, but that is because I'm a little skeptical in regards to what the SEC is going to do in the future now that the ETFs are available, because the big money, as we know, control the SEC, right? The big money make a fee on offering ETFs. So now why would they might be at risk if people decide, I'm not going to buy ETF, I want to buy the real Bitcoin. Maybe the SEC might crack down on exchanges. Who knows what happens? Something to keep in mind, let me know down below. Do you think the ETF is an overall positive or a slight negative? I'm leaning between the overall positive and slight negative. Again, depending on the way you look at it, will determine your outlook. Enough about that, guys. Let's go ahead and jump into the analysis. Starting on the total cryptocurrency market caps, we have on the left the total cryptocurrency market cap for Bitcoin. As you can see, we are holding very steadily above this major area of resistance at 1.66 trillion and 1.56 trillion. While we remain above this level, we are looking for a continuation upwards into our $2 trillion. You heard it. $2 trillion resistance. We are looking for a move upwards while we remain above this level of support, looking very bullish. Moving over to the total altcoin market cap, we have just bounced from a major area of support, which is going to be that low we retested all the way back in July 2021. We did retest this level of resistance back in August 2022, validating this area as a major trigger point. If we look at this, we have two phases. We have the bearish phase, we have the bullish phase. We are technically now entering and have retested the support of that bullish phase. The total altcoin market cap is looking phenomenally bullish while it remains above this level at around 440 billion to 465 billion, looking for a continuation aggressively upwards over the months to come. fantastic to see if you have altcoins. Let's go ahead, guys, and jump over to this price action here. As we can see, in the last 24 hours, we did see a little bit of turbulence, a little bit of volatility. We came up, we bounced, we retested, we crashed, we saw a bunch of things happen. Let's discuss what is going on. So from a structural perspective, there are two things we're looking at. Number one, our major level of resistance, and number two, the supports below the major level of resistance. That is literally all we're looking at today, because those are the most important things to discuss. So as of right now, resistance is resistance until it is not. Our major level of resistance, which is going to be this 48 to 46K level, is still acting as a huge macro level of resistance, not only on the daily, the weekly, but also the monthly chart. The monthly chart, this level of resistance is reflected by the dotted trend line on this chart, and on this chart, it is reflected by the dashed trend line. So a huge level, a multi-month level of resistance that we are currently retesting. As you know, one of my favorite sayings is resistance until it is not. Support is support until it is not. And while we are at resistance, we have to be open to the possibility of a rejection. Now, this doesn't make us bullish. We are doesn't make us bearish. We're very bullish on Bitcoin since 19K. However, we have to remain objective and not let our emotions get in the way. While we are at resistance, the risk return to the upside becomes smaller, then the risk return to the downside. So we need to talk about two things. We need to talk about what would validate a break above 48K, what are we looking for, and what would happen? And then number two, what would be the impact if 48K remains as resistance? Where would the price go? So let's start with the first one, as it is very, very simple to answer. To break and validate a close and a breakout above 48K, we need to see a monthly candle close above the 48K resistance. If we look back at the past, guys, we can see on the monthly chart, the 48K resistance is reflected as a dotted trend line. The dotted trend line is simply taken as the first high created after the first low after the all-time high. I'll say it again. We create an all-time high, we drop significantly, we create a low. Then the highest point we bounce after that, the dead cat bounce, is going to be the high that we reflect as the dotted trend line. In this instance, it was around about 11,000, 12,000. In this instance, it's around about $700. And in this instance, it's around about $48,000. So that is where we derive the dotted trend line from. The dotted trend line happens to be a major level of resistance. You can see it on this chart over here, the dotted trend line. We have a major area of resistance right over here. We failed to break above massive deviation, only to break it above it and continue aggressively upwards. Back over here, dotted trend line, bounce, create that high. We did not even close a candle above it. We finally closed above it over here and we continued upwards. So that dotted trend line is a significant level of resistance. And once more, that level is 48K. So what have we seen in the past and what are we going to likely see again? Based on historical data, every time we close a monthly candle above this level, okay, instance number one, instance number two, we generally continue upwards into the bull run territory. So moving back over to this chart, we can see that will classify any price action that happens below the dotted trend line as two things. Number one, the bear run until we create the low. And then after the bear run, while we remain under the dotted trend line, we're in the accumulation phase until we break above, which is when we enter the bull run. So we are in the bear run until we create the low. We are in accumulation until we break above the dotted trend line. When we break above it, we enter the bull run. The same thing. We are in a bear market until we create the low. We are underneath the dotted trend line. We remain in accumulation until we break above the dotted trend line. And then we enter a bull run. So according to historical data, we are looking for a monthly candle close above the dotted trend line to validate the breakout of 48K. A break of 48K will result in Bitcoin continuing to its next level of perceived resistance, okay, on the higher time frame, which is going to be 64,000. On the short term, is going to be 52.7K based on our VRPV gap. More importantly, it will turn the level of 46 to 48 into an area of massive support. This is what needs to happen for Bitcoin to continue higher from here. So, what are the chances of a rejection? And What are the short-term charts telling us about that? So starting on the monthly chart again, what we have seen in the past is every time we see a monthly candle close above that dotted trend line, it happens to occur only after the halving event. The halving event being the solid green vertical line, sorry, this one over here, okay? This one over here, and this one over here. So we're going to see the dotted trend line breakout occurs after the halving, which means we still have about 2 months remaining until the halving event, which means we would be premature to break out of the dotted trend line right now, according to historical data, if the breakout occurred. Something to keep in mind. So we have a massive level of resistance. Historical data is telling us we would be early breaking above it right now, which opens the idea of a potential correction for Bitcoin. So let's go down to the short-term charts. What would happen if we fail to break above and close above 48K? Where could Bitcoin go? So zooming out over here, guys, we need to take a look at one key level. This is going to be this uptrending diagonal support line. You know what? I'm actually going to delete absolutely everything off this chart really quickly, except this uptrending diagonal trend line. I think I drew it incorrectly. If not, all good. This is going to be uptrend, okay? This is going to be the key level of support. Bitcoin will need to remain above. If we lose this level, Bitcoin will be officially entering a short-term downtrend. So if we break below, this is going to be the 48K resistance, say we fail to get above here, we could potentially continue back to retest this uptrend before continuing back upwards, breaking through later on in February, potentially even March, okay? That could happen. Worst case scenario for Bitcoin is if we fail to hold above this uptrend and break below it, what would happen to Bitcoin? Do you see this gap here in the VRPV? This gap will very likely fill. Where will we end up? Okay, let's zoom out. We will come down and retest this area at around 38,000. This would actually technically still be a very healthy scenario for Bitcoin, as we would be still maintaining the base of support right over here. So there's two solid thin lines over here. This is an area of support between 40 to 38K. Only if 40 to 38K is broken below do we actually enter a weekly downtrend. So we could see a correction all the way down over here and still be weekly bullish. If we break below here, we would be actually initiating a weekly downtrend, which could take us much lower. So the two scenarios I'm looking for, number one, would be the early bull run scenario. Would be a monthly close above 48K immediately, which would result in the price continuing upwards. Number two would be a correction into the 48K range, only then to continue aggressively upwards later on past around May, whenever the 4-year cycle halving event is going to be. When is that again? Let's take a look. It is going to be in April, May. So April 2024, guys. Thank you for watching. I hope you have a fantastic day. Let me know about the ETFs down below. I'm actually very interested in hearing what you guys think. We'll catch you guys in the next one. Cheers. Oh, check out the Crypto Academy courses, guys, before I get. If you are interested in learning how to do TA, analyzing charts like I do, if you're interested in learning about candlesticks, technical analysis, risk analysis, and even emotions, this is the place to be. If you're a brand new trader, a brand new investor, a brand new technical analyst, this is where you want to check it out. Again, all the contacts can be found in the links below. Cheers. I'll catch you guys later. Cheers.